I'm trailing stop this close. So there we go. Boom. And that pays my grocery bill for the month. So I'm going to lock that in and withdraw that. SQ, nice. Wow. Okay, so so you want to become a successful trader. You want to see consistent payouts. You want to be able to do the things that you see guys do on social media. You want to become financially free. You want to be able to increase your income, have an extra side income. You're coming to trading to do that. Well, that's exactly why I'm getting on here, and I'm giving you guys completely for free. So click that like button if you haven't already. 10 episodes of all the basics, the simple, basic, but highly effective things. And I'm giving all that to you and putting in your hands all the tools and supplies that you need to absolutely master these markets and become consistently profitable. Get those consistent payouts, not just a couple months of results and then you're done and you're a one hit wonder. Consistent, long term, sustainable profitability. And we're going to be kicking it off here, episode number 1, the draw on liquidity. Now, you might be asking, why are you starting with this? Draw on liquidity. This is too complex. Well, listen, if you don't know where the market is drawing towards, you don't know what to look for in terms of where the market is going to draw towards up and down, there's only 3 things the market can do: draw higher, draw lower, or consolidate. And our job is to not be correct every single time, but it's to be able to, more so than not, and have an edge on being able to consistently predict when will these markets go up or down. Okay? So, very, very, very simple. Kicking it off, we're going to get straight into it. Identifying the draw on liquidity. There's like 3 very simple things you're looking for. Number 1, previous daily high and low. If you're not familiar with that, it's just simply the previous daily candles high and the previous daily candles low. Number 2, previous session low and high. I trade the New York session. I teach the New York session primarily. So you're going to be looking for, and we'll dive into this in examples on the chart. We're going to do at least 5 examples on the chart, breaking it down to you guys what exactly you're looking for and all that good stuff. So once again, hit that like button if you haven't already, and let's lock in. So number 2 is going to be your previous session low and high. Now it's important to understand these 2 specific draws and liquidities. These are more for day trading, right? Which typically means holding for the daily range and just overall usually a bit larger trades, not every time, but most times. And if you're more of a short-term type of guy, well, guess what? Here's the draw on liquidity for you. Number 3, previous hour high and low. These 3 points that I just talked to you right now is exactly what this algorithm in $1 trillion market refers to on a daily basis. Nothing more, nothing less. These are the 3 ultimate draws in liquidity and the only thing you need to focus on. Now, with these 3 draws and liquidities, the bonus is going to be equal highs and large wicks. So what does equal highs look like? So for example, the one I can show you right now is, look at this right here. Are these equal lows? Not exactly equal, but they're relatively equal. Anytime you see a smooth bottom like this, that is going to ultimately amplify the draw on liquidity. So if this is a previous daily low, like example right here, and it's a smooth bottom like that, relatively equal lows, that's one of the highest quality draws on liquidity that you're ever going to find in price action. So with that said, now that we're on the charts, we're going to go ahead and dive into the first example, and you're going to be looking at this specific day on Wednesday, July 2nd. All right. And we're going to be specifically referring to the draws and liquidity that I told you. Okay, so we're looking at this Wednesday here, right? So all you're going to do, very simple, is you're going to the previous day on Tuesday, July 1st, okay? And all you're doing is identifying the high of that daily range. So literally, if you have to, go ahead and put vertical lines here. So here's July, and here is the end of July 1st, right here at midnight. Once you turn over, obviously it's into Wednesday. This is the previous daily's price action. So here's previous daily high, here's the previous daily low. This is the only thing that you are focusing on. So heading into this Wednesday, what's the data that we have at hand right now? Well, take a look. Price runs down. What did it tap down into? Previous daily low. Now we're looking at, along with that, the previous session high, which is London session high, and the previous session low. So real quick, I want to dive down and show you guys what that looks like when you're identifying previous session high and low. So here is your classic London session. What you're doing is you're anchoring from 2 a.m. 5 a.m. Okay, and what 2 to 5 a.m. is your classic London session kill zone. So relatively around that time, you're just simply identifying the highs and the lows. So in this example here, your London session high is going to be right at this smooth top, okay? And the previous session low is going to be right here, understood? So what's the information that we have at hand right now? Well, let's back it up for a moment. Take a look. We know that we tagged previous daily low. We know that we tagged previous session low a long time ago. Now what's been left unfulfilled is number one, previous session high and previous session low. Understood? Now what did that tell you guys is a bonus and amplifies these draws and liquidities that have yet to be fulfilled on this Wednesday, July 2nd. Let's zoom in on this top right here. Take a look at this. Take a look at this zone right here. What do you see inside of this? Let me change the color so it's a little bit more visually appealing. What do you see inside of this? I don't know about you, but that looks like a really smooth top to me. Look how clean that looks. A triple top, way too smooth, way too clean. That amplifies the previous session high as a draw on liquidity. Now let's go above. Look at previous daily high here. What's this? What is it? It's a very smooth top. Once again, a quadruple top, relatively equal highs, way too smooth. That amplifies the previous daily high as a draw on liquidity. So the fact that we have an amplified London session draw with relatively equal highs and relatively equal highs stacked up with previous daily high, this makes the draw on liquidity extremely strong on this day. So you forget about everything that you ever learned about price action. Okay, and just strap in on this one video. I promise you, overcomplication is not necessary right now. Simply just learn what I'm teaching you at hand. In the 9 extra episodes I give you, it's going to be all the information that you need surrounding what I'm teaching here. It'll all come together and you, sir, will, or ma'am, will turn into a monster inside of these markets. Okay? Let's go ahead and go to another example. I want to show you guys more examples just so we're not one-trick pony here, okay? Let's go to this Wednesday right here. Not as volatile, right? Let's take a look at it. Here we have an interesting day, okay? And this is a very important example that I'm telling you guys right now because we're looking at it. We're identifying previous daily high. Here's previous daily low. What's the issue with this right here? Previous daily low is very far to consider. We already swept previous daily high long before the New York session, okay? So if you're not familiar with the New York session, just know it's from 9:30 a.m. New York time to 11:10 a.m. New York time. Okay, so by the time we get to 9:30, the previous daily high has been smoked. Same with previous session high. So what do we have left? Previous daily low, previous session low. Previous daily low is very far to consider, so if that's the case, what do I rely on? Previous session low. So once again, this example right here, what do we have at hand with this example? Well, coming into the New York session, we know we're overbought, meaning we're above previous daily high and we're above previous session high. So let's zoom in real quick. Why is this previous session high? Once again, you identify 2 to 5 a.m., find your high, find your low inside of that time zone. So in this example here, you can clearly see price reverts to previous session low, comes up off of that, never sees previous daily low. Okay? Another example of this being a very strong draw on liquidity, but what amplified this? Once again, look at the lows. What is this? Look at that wick right there. Large wick, and it's relatively equal lows. See how smooth this bottom is here? We have a double bottom and we have a large wick. This amplifies the draw on liquidity for previous session low. That was bagged and tagged. This is a whole day of great opportunity without even needing to get to previous daily low. Now, once again, let's say that you don't have the guts to hold the whole way for previous session low. You're going to do a short-term scalp, okay? What does that look like? All right. So let's say you're waiting, you're patient, all right? And all of a sudden you get this retrace and you want to find a short. Well, at this moment, we're at 11 a.m. Okay, so let's say you want to target previous session low because you're bearish with the information we have at hand. Right here at 11 a.m., what's going to be your previous session low and high? What you want to do is simply find 10 a.m., map out its high, which is right here at 10 a.m., and then map out its low. At 10:24 a.m., that's the low. Boom. So let's say you short this retrace. Comes up, you're bearish, you target previous hourly low right there. What amplifies this draw on liquidity? Take a look at that right there. Oh, would you have it? Very large wick that immediately makes the draw on liquidity much stronger like a magnet. This right here is a really good opportunity to pay yourself, right? It offered about 500 to 465, just around 35 handles. If you bag 35 handles consistently, that can make you rich in and of itself. So it's not about holding for large trades. If this is your personality, you're a short-term scalper, that is very valid. So without further ado, let's move on to the next example. All right, and we're looking at this Friday, June 20th here, same exact logic. What are we looking at? We're identifying immediately our previous daily high, previous daily low. Now, once again, let's refresh. Why are we mapping out these levels? Because when we're talking about drawing liquidity, we're talking about you knowing where price is likely to draw to next. If you know this, you have a power that 99% of people do not have, okay? And that is why this is so important. So immediately you're identifying previous daily high, previous daily low. Nothing is referred to more by large institutions, the algorithm, than previous daily high and previous daily low. Okay, so coming to this Friday, June 20th, we identify our previous daily high here, boom, and our previous daily low. Previous session high, previous session low. And then we're trading the New York session, correct? So right at that 9:30 candle right here, see that? Okay, whenever I'm toggling the candle, you can see down here it pops up at this red box. Okay, so here's 9:30. Coming into this AM session, once again, what's the logic? Simply by using these drawn liquidity levels. All we know is price is overbought once again, meaning it's above previous daily high and previous session high. All right. Now, I want you to take note of this right here. 2 reasons why this previous daily high was such a strong magnet. Okay. Number 1, it's previous daily high. Number 2, look at that. Once again, relatively equal highs, and there's a large wick as well. So, with that said, once again, we're overbought. We come into the New York session, we just freshly sweep that previous daily high, and we have a really good reaction up off that high. So clearly something's happening after we sweep out that relatively equal high, previous daily high. Now, on the flip side, what has been left unfulfilled? We have yet to take out previous session low and previous daily low. Look at previous session low right here. Don't even worry about previous daily low yet. Take a look at previous session low. What do you see? Number 1, obviously previous session low is going to be a good draw, but look to the left side of the chart. What is this right here now? Relatively equal lows. Boom. That's a bonus that amplifies the draw on liquidity for previous session low. Very simple logic here, but very effective. Now, once again, if you don't have the guts to hold to previous session low or previous daily low, what do? Let's go down. Look at this 1-minute chart. All right, let's say that you're hunting a short in the 9 a.m. hour, right? What are you doing? Once again, you're identifying the previous hourly low. Here's 8 a.m. Here's its low. Boom. And here is the 8 a.m. high. Okay. Obviously, previous hourly high has been swept for a while. And as the market starts trading down, you find your entry somewhere. What's this right here? Previous hourly low. But what amplifies it? Look at it. Once again, the repeating phenomenon, relatively equal lows, engineered in the market, meaning the markets place those in to draw back to them at a later time. Very good draw on liquidity intraday. Let's move on to another example. All right, so here we're looking at Monday, June 9th, okay? And once again, we're immediately identifying the previous daily high and the previous daily low. Coming into the New York session, once again, here's our 9:30 candle. What is the information that we have at hand? Well, we already swept previous daily low. Previous session low is here. Previous session high is right here. So the information that we have at hand coming to 9:30 is we made a really aggressive attempt to attack the London session low, but we failed and immediately show aggression to the upside away from it after we already swept previous daily low. So with that said, this makes things a little bit more difficult, right? Because we don't have the London session low tapped. So once again, using the same logic on these draws on liquidity, at 9:30 when we're trading New York, we see that the market has already done multiple drives below our high quality draws on liquidity, but has yet to tap the previous daily high. Okay, so in this example here, you're looking at it and what's going on at this previous daily high. Take a look at that. Once again, we have relatively equal highs, 2 large wicks. This amplifies the draw on liquidity for the previous daily high, and you can see that that was absolutely smashed. All right, let's move on to another example. Here is June 5th on a Thursday. You're immediately identifying the previous daily high on Wednesday, right? So you're all very simple. Here's the beginning of Wednesday. Here's the end. Okay, so let me give you guys better visuals on this, all right? Here's Wednesday's range. If you have to map out vertical lines and you're just starting out, this is what I used to do back in 2018. It's okay. We all started somewhere. Here's the previous daily high. Here's the previous daily low. Where's the previous session high and previous session low? Once again, very, very simple. Go to 2 a.m.'s low, whatever the low was created from 2 to 5 a.m. There it is. And here's the previous session high. So, as you can see here, we have yet another subtly tricky example. Okay? And why is that? Because once we reach our New York session opening, right, we've already whipsawed, meaning we trade in a wild manner in both directions, sweeping both the previous session low and the previous session high. So the information that we have at hand here now, inside of our New York kill zone, the market ran above once, twice, 3 times above our previous daily high and our previous session high. What's been left unfulfilled? Previous daily low. The only thing that is yet to be tagged on all of our high quality draws on liquidity is the previous session low. Take a look at the previous session low. What do you see? A very obviously large wick. Okay, when I say a large wick, take note of the word obvious. It has to be obviously long. Okay? Previous session low once again smashed in this example. Now, as if I didn't show you enough examples already, let's go ahead and into another high quality day here and show you the power of what I'm teaching you guys right now. Here is April 30th of 2025. So we're going back a month in data. Here it is. Once again, you immediately, avoiding the complication, mark out previous daily low, previous daily high from Tuesday. So we're looking at Wednesday. All you're doing is going to Wednesday's data, marking out the previous daily low and the previous daily high. Very, very simple. Okay. Once again, you go from 2 to 5 a.m., mark out the low and mark out the high. Going into our New York session, once again, here's 9:30 a.m. What does it do? It trades down further solidifying the oversold condition of the market. What do we know and have at hand with the draws on liquidity in mind? Have we taken out previous daily low? Yes, indeed. Have we taken out previous session low? Yes, long ago. Now the question is, what's been left unfulfilled once again? Have we taken out previous session high? No. Have we taken out previous daily high? No. Take a look once again. It repeats and repeats over and over and over again. What does this London previous session high draw look like to you? Let's zoom in. Take a look. We have a triple top in the market. We have a very smooth, relatively equal high top sensation. This amplifies the draw on liquidity for previous session high. Let's take a look at previous daily high. Zoom in. Multiple wicks, large ones. And once again, a triple top in the market, equal highs, smooth top. This is a bonus and an add-on to amplify the draw on liquidity for previous daily high. So we have 2 amplified draws on liquidity that have yet to be unfulfilled. So we're going to be focusing on long positions. So what do you wait for? You wait for after 9:30, you find a retracement, you put your long position, and you target the draws on liquidity. Okay? Now, once again, let's say that you don't have the guts yet to hold for this type of thing and you don't want to do it. You're a short-term scalping type of guy. Let's dive into it. On this specific day here, once again, you can look at here. Okay, for example, here's 10 a.m. When we start to reverse, you're looking to take a long maybe inside of 10 a.m. Let's say that you get on this retrace. What are you doing? All right, you're a short-term scalper, so you just simply long when the model presents and you target previous hourly high. Where's the previous hourly high? Well, let's find 9 a.m. Go forward in price. Oh, here we go. Here is previous hourly high, and here is previous hourly low, which has already been swept, by the way. So once again, the same exact logic applies. We know that previous hourly low was swept right here on this candle. We know that we have yet to reach previous hourly high. Okay, and what's this right here? Relatively equal highs. So boom, there you go. That's a short-term scalp and not even needing these levels reached. Okay, whatever suits your personality, whatever makes you money, That's what matters. So this here is going to conclude episode number 1 of the Beginner's Mentorship. I hope you guys found something useful, knowledgeable, and insightful out of this. If you did, smash that like button, and that'll give me, just more motivation to produce these other 9 episodes and really just give you, once again, every single tool to set you up for success. The more you show up, the more reps you gain in the market, the more times you look for this type of thing, the more you're going to see how much it truly repeats and the power that this simple stuff actually yields. Okay, so you apply the simple stuff consistently, all of a sudden you're an advanced investor, you're pulling out payouts consistently, you're just like the guy that you saw on social media, all that amazing stuff that you dreamed of, correct? Take care, guys.